Hello everyone, welcome to another chart breakdown on EU. I'm going to be doing this analysis in order to guide you guys on how you guys to position yourself this current week and to avoid doing reckless mistakes that normal traders actually do. So you guys will focus and stop whatever you are doing and attach your attention to this video. Okay. I'm going to start my analysis on the weekly time frame. Okay, here's what I want to do on my analysis. First thing, I want to identify my short-term drawn liquidity, right? That is the trend for the day. And secondly, I want to identify my long-term drawn liquidity. Okay, first thing first, looking at EU on the weekly time frame, I can clearly see that EU is trading in a range. Then EU got liquidated below the range. So when whenever price liquidate the low of the range, then there's a high chance, right, that price is going to the opposing end of the range. So my long-term drawn liquidity is this range high, right? Okay, based on range trading, when price takes one low of the range, then price is going to the opposing end of the range. Okay, looking at EU, I can clearly see that price took the range with one bearish candle. As soon as price expanded above that bearish candle is now going to act as a key level that I'm going to use for my future trading. Okay, you can clearly see that after price made an expansion profile above that bearish candle, price now made a range profile, giving us some bearish weekly CRTs in which you could potentially trade, right? Because if you look clearly, right, you can clearly see that EU was actually giving you a bullish CRT then a bearish CRT. Regardless, that's just short term. Long term is the opposing range high. Okay, now I'll first show some little analysis to you guys. And on the weekly time frame, you can also see this weekly order block here. Right, order block, you can actually use it in order to frame a trade on the weekly time frame. Price has already tapped into the weekly order block, right? The first candle, we can call that candle our accumulation. Second candle, that might be our manipulation. So this week we are going to be trading the last week and use the last week candle as our accumulation candle. Just look for a manipulation candle to continue trading based on logic. Okay, now I'll move to the daily time frame. On the daily time frame, I always like to adjust my analysis as much as possible to avoid inconsistency when analyzing. Okay, on a daily time frame, I can clearly have my daily order block, daily fair value gaps. Those are my key levels on the daily time frame. These are my fair value gap and another fair value gap below. Okay, looking at EU, you can clearly see based on market structure, right? Price was in a bearish trend, lower low, lower high, lower low, lower high. Then price made a true market structure shift, right? And you can call that our dealing range. Why is it our dealing range? Because price have taken both the low and the high of the range and then created an expansion swing. And when price create an expansion swing, we have our dealing range. What do we do when we have our dealing range? We divide our chart into two. Let me first map up this. See, you can call that our market structure shift. Chalk, change of structure, right? Okay, we divide our chart into two whenever we have our 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 bullish dealing range. So the reason why I divided the chart into two is because price took the low and the high of this range and then create an expansion swing. So when price creates an expansion swing, we always have to divide our charts into two. That is our premium and our discount. Regarding our key levels, right, we focus on the key levels which are the discount, because they are high probability. Regardless, the market can see reverse up, and that is actually normal. We can actually have a reaction above our premium or above our discount. That is our key levels which are at premium. Those ones, whenever price is reacting up over there, we have to take profits early, and we have to avoid taking swing trades and holding them too long, because the market can easily move to our discount. So based on this, I'm going to be actually looking for a reaction, right? Remember what I said. My goal is to first identify my short-term drawn liquidity, then my long-term drawn liquidity, right? Okay, price is at premium, right, and price is actually tracing lower. We have our bearish fair value gap, in which price was actually reacting towards it, right? When we have this bearish fair value gap above our previous day high, we should expect price to continue selling, because we also have our SMT. This is GBP USD. Let me show you. Smart money technique, in which I actually seems like network slow, but we have this fair value gap in which price actually made a reaction. So we expect price to continue moving towards our previous day low, right? And we just keep going lower until we have a true market structure. We have a true reason to start buying, right? Based on this, I could just position myself here, right, after having this sweep, right, applying our open high low close strategy. We are going to go to the 4-hour time frame, look for a valid CRT, right, after having this reaction above this fair value gap, right. I will come at the 1 a.m. candle. This is our 1 a.m. candle here, and I will then position myself. Let me first mark my opening time, then I'll position myself on the 15-minute time frame, and then I'll look to sell, right, towards the CRT lows. Have this high in which you can see some important high, then you can then sell. Look for a sell setup after our model number 1 setup is confirmed. We have this our manipulation candle, press engulfs it like it did here. You can then expect price to actually reverse towards this FVG, because this order block here it generated liquidity, so this FVG also generated liquidity. So you can just use either this order block or this FVG. Either use FVG below, or we can use our order block above to sell. Okay, that is my thought process on EU. So could potentially look for sells, like short-term sells, because in the long term price is still bullish, right? I hope you guys are noting down. If you are selling on this FVG, your stop should be above this order block, because that is the safest high in which we don't expect price to actually go back to. And you can potentially target 3R, and once we hit our 3R, you can just close your trades and continue the next day. Okay, looking at what price did here, this is potentially our short-term drawn liquidity. We have this CRT price took the high and price is coming towards a low. We had our model number one up here, right? Our model number one up here, and then we have our we have our OTE. So probably price is trying to make a kiss of death. So after the kiss of death, we expect price to run lower. So that is, and this might be our kiss of death. You can never tell. Or price might see make another kiss of death. This might be, or this might just be an OTE, and then price makes a kiss of death before going to the opposing lows, right? So this is just how I actually do my analysis. If you are confused, you can write any of the things you are confused on the comment section, and then I will try as much as possible to make a video and explain how to trade properly, right? Okay, that's just it. We have price actually doing something cool here. Regardless, we don't forget we have this our key levels below here. Observe and see, but we don't actually, because what makes this bearish fair value gap high probabilities, because the bearish fair value gap was formed as premium. So whenever we have this premium fair value gap, right, we ought to have think of the sales, because the market actually tells us what it wants to do before it does it. That is just it. So always stay subscribe and notified, so that you subscribe, so that whenever I drop any new video, you'll be the first to watch. Okay, thank you. I love you guys. That's all for today. EU, my favorite player.